This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pacheco. Thanks for joining us at XM.com. The US dollar has started August on the back foot as markets are increasingly convinced that the Federal Reserve's rate hike days are numbered, while Wall Street has just notched up its best month since November 2020, cheered by more upbeat earnings. Days after the US GDP report put the economy into a technical recession, personal consumption was shown to have jumped by a solid 1.1% in June. More worryingly, the Fed's favorite inflation gauge, the core PCE price index, ticked up slightly in June for the first time in 4 months. Yet traders don't appear to be struggling that much, navigating through the volatile data, as their primary fixation is how high the Fed funds rate will go and how quickly it will get there. The dollar was on the verge of erasing its weekly losses on Friday, following the stronger-than-expected spending and PCE inflation numbers, but its chances were scuppered by soft inflation expectation readings. Receding expectations about aggressive rate hikes continuing into 2023 have spurred a rally in government bonds, devastating yields, and last week's FOMC meeting and data out of the US only reinforced this trend. In equity markets, there were few signs of caution about how Fed speakers and the upcoming ISM and NFP data this week might affect the narrative, as generally impressive earnings results in both America and Europe gave the bulls the upper hand, while the retreat in yields provided additional support. The S&P 500 rallied by 9.1% in July, and the Nasdaq Composite surged by more than 12%. Earnings from Apple and Amazon.com capped a not-so-disastrous earnings season for the big tech. Record profits by the energy giants ExxonMobil and Chevron also boosted the broader indices, and European markets are climbing on the first trading day of August. Even stocks in Asia are mostly positive today, shrugging off weaker manufacturing PMIs in China. Risk-sensitive currencies, such as the pound and the Australian dollar, also benefited from the improved sentiment, though it was hard to determine what extent of their gains was down to risk appetite and how much of it is being driven by the pullback in the US dollar. The yen is broadly firmer today, as there could also be some safe haven flows stemming from recession risks that is adding to the yen's upside. This was today's Daily Market Comment. Thanks for joining us at XM.com.